Lori here with today's business tip. So I'm doing a series on income taxes, and one of the things that I want to go through is kind of what the IRS uses to determine if you're a business or not. Because guess what? That is the basis of whether you can write things off and record your income on your taxes. So let's just talk about that for a second. So what they're going to be looking at is, are you carrying on your business in a business-like manner? Are you maintaining complete and accurate books and records? How much time and effort have you put into it to make it profitable? Are you depending on the income for your livelihood? Are your losses due to circumstances beyond your control, such as, ramping up your business, you're just starting it up? Whether you change things in order to try to improve profitability. So what could that mean? Like increasing the number of lives, starting craft fairs, those types of activities. So they're going to be looking, if they ever come and look at you, that's what they would be looking for. They want to know that you have the knowledge to carry it on. So they want to see that you are engaging in activity to make the business successful. So what does that mean? Well, that could mean like joining one of these groups where they teach you how to have a successful business. That would be something that would be considered gaining knowledge to become successful. Were you successful in making profits at similar activities? Like I said in the last video, are there some years that you're making profit and some that you're not? Are you losing money every year? And whether you expect to make a future profit. So a lot of this, if you're just kind of listening, is intent, right? So a lot of it is, are you intending to make a profit? Are you intending to have a successful business? A lot of it is your activities that you are using to make your business successful. So as long as you're doing those, then the IRS is going to consider, yes, you are a business, and that is the first task. Okay, so now let's talk about how you should account for your income expenses. So the IRS expects you to use cash method. So what does that mean? That means when you spend the money, you record it. When you receive the money, you record it. So if, let's say that someone ordered a whole bunch of t-shirts from you and you received the money, but you haven't sent the t-shirts out yet, the IRS wants you to go ahead and record it because you have the cash. Okay, so that's cash method. Let's say that you purchase supplies and you purchased them on December 31st, but they aren't going to come in until next year. Guess what? The IRS wants you to record it right then because you've spent the cash. So let's talk about when you purchase things on credit cards. Guess what? That's considered cash to the IRS. And I know that that's kind of confusing to people, but if you have purchased something on a credit card, the day you purchased it is the day you spent the cash. So that's how you want to make sure that you have your accounting set up. So when you spend it, when you receive it, that's when it goes on your taxes. So you don't need to be very stressed about, you don't need to be really stressed about how to record it. You just want to make sure that you get it recorded by the end of the year. It is better if you have it recorded throughout the year. It takes a lot less time at the end of the year if you have been recording it all throughout the year. But if you haven't, don't panic. Just go ahead and start getting it together now. All right, so on Schedule C, when you're looking at Schedule C, this is the form that you use when you have a business. There are going to be some areas where you are going to be recording your income, and there's going to be some questions. So I just kind of want to go through the questions real quick. So what it's asking you is all the investment at risk? Is some of the investment at risk? So in your case, all the investment is at risk, and you absolutely want to answer it that way, you know, unless there's some reason that it's not at risk. But you can't take your losses if you don't have it at risk. So what does that mean? That means if something happens and your business fails, you've lost all that money. That means your investment is at risk. So of course it is at risk. Of course, you know, all the supplies you have, anything that you have in inventory, all of that is at risk. If something tragic happened, you would lose it. Okay, so let's talk about income. So income is anything you received as far as money, or if you trade. So let's say I know some people that trade out services, like take a wreath and someone cuts their hair. Take a wreath and someone provides them a service. You know, they decorate their house for whatever. Guess what? That's income. So you need to record the value of that as income. Even though you didn't receive cash for it, you have traded, and that is considered income. So you want to make sure you're very careful, because if you have talked about it on social media, if you have talked about it to people, then it's recorded somewhere that you have done that. Okay? So you want to make sure that you record everything. Everything that you've sold, whether you receive cash for it or not, then that needs to be recorded, because you got value out of it. So that's what you want to think about when you're looking at income. Did you receive some kind of value, whether that was monetary or not? So that's very important to understand. The IRS considers that if you have traded something out, you got value for that. So I just want to kind of give you a big overview of, you know, your income, and just kind of what the IRS uses to determine whether you're a business or not. In the next video, I'm going to go through expenses. So that's the biggest part, really, with the IRS and the forms. You really want to be very careful. So these income rules that I explained to you apply to whether you are using a Schedule C for a sole proprietor, or whether you are doing a form for an LLC, LLP, or S corporation. All the same rules apply no matter which form you're having to use. Okay, and I will see you in the next video. Don't forget, I have a group if you need more guidance, and you can come and get tips on how to start and run a successful business. And we have a great group. We have lots of training. We have twice a week question and answer sessions, and those are really great. They're really wonderful. All right, so the links will be in the description below, and I will see you next week. Thanks for watching. Bye-bye.